Good evening, all the joinees. Thank you for joining in. Hi, this is Ashi. Welcome to NGEN Markets webinar. Meanwhile, others join in. Let us have a look at today's topic. So today we'll be covering the topic of mutual fund analytics, wherein we'll be looking at performance of a fund with its peers and benchmark, then asset allocation, followed by understanding the rolling return and rolling return distribution. Moving forward with drawdown analysis and scenario analysis, seeing the fund and the benchmark performance. Finally, we'll be looking at the reporting options. The forum will be open for a Q&A session. Now, this is the landing page of NGEN Markets. Let us see what are the multiple ways in which you can load a fund for a single fund analysis. The very first method is using this search bar on the top, wherein you can manually type the name of the fund. So for example, if I select HDFC FlexiCap Fund, I'll just click on that particular fund's name and it will load a single fund analysis for that particular fund. The second method is using the Funds tab. Now this is the screener that we have provided, wherein you can filter the funds based upon the AMC, or you can filter it based upon the categories as well. Now here you can see that there are 4 baskets, which are basically the SEBI asset classes, and within which are the multiple categories listed. Now here you can select as many categories as you wish, but for today's webinar, we'll be taking FlexiCap Fund from equity as an asset class. Now once you click on this checkbox, all of these 39 results will get loaded right here. Now to narrow the list down, you can also apply certain filters. Now let us say we do not want any sort of young fund. So for that, we can apply minimum age as a parameter. So here I will enter minimum age as 5 and then hit on apply. You can see that the results have reduced from 39 to 23 such funds. Now to select a particular fund for a single fund analysis, all you have to do is click on that particular fund's name. So I'll just click on JM FlexiCap Fund and it will load a single fund analysis dedicated to FlexiCap Fund from JM as an AMC. Now this was the second method. Now we look at the third method. Third method wherein you can load a fund for single fund analysis can be done by using this Compares tab. Now this is the landing page for the Compare tab wherein you can have a detailed analysis. Now here you can add a fund manually by searching for it using this Add Security as a tab, or you can add a SEBI category by using this Add Group as a tab. Now continuing with the example of FlexiCap Fund, I'll just enter FlexiCap right here and I'll just select. So all of the 39 results will get loaded right here along with the NAV details and several other parameters. Once this gets done, you can anytime click on that particular fund's name to again load a single fund analysis. Now here, if I again click on HDFC FlexiCap Fund, it will load a dedicated single fund analysis again for that specific fund that I have just now selected. Now here on the left hand side, you can find some basic details like ISIN, AMFI code, asset class, category, as well as the start date and end date is something that you can change. For that, all you have to do is click on this change as an option, wherein you can custom your own start date. Now let us say you want to analyze this particular fund for the period of past 5 years. You can custom your date or you can directly click on 5 years ago. Now once this is done, you can see a graphical representation wherein this blue line represents our fund and black line represents our index, which is Nifty 500. Through graphical representation, you can see that there is a clear outperformance by the fund in comparison to the index. On the right hand side, you can find performance statistics wherein you can find their MTD, that is month to date, YTD, year to date, as well as 1 year, 3 year, and 5 year annualized returns. Now let us take a look at certain parameters. The very first would be this cumulative return, which is basically absolute or point-to-point return. So for fund, we can see that there's a cumulative return of 178 in comparison to benchmark, generating a cumulative return of 130. So we can see that there's a clear outperformance by the fund in comparison to the benchmark when we take cumulative return as a parameter. Next is CAGR, which basically tells you the average rate of return that a fund earns on an annual basis. So here we can see that the CAGR of our fund is better in comparison to benchmark, generating only an 80% of CAGR against 22% of CAGR of the fund. Next parameter that we'll be looking upon is this annual volatility, which is basically a measure of standard deviation indicating the risk. So here we can see both fund and the benchmark are taking similar amount of risk. With a similar amount of risk, our fund is able to generate a better cumulative return, which is something that is reflected in the Sharpe ratio. So Sharpe ratio is risk-adjusted return, indicating how well the fund is performing in comparison to the risk that is being taken. So higher the Sharpe ratio, the better it is. So here we can clearly see that the Sharpe ratio of our fund is better in comparison to the benchmark. The next parameter that we'll be looking upon is this cumulative excess on benchmark. This is nothing but the alpha. So we can see the alpha is about 47%. This is nothing but the difference between the cumulative return of our fund with that of the benchmark. Next parameter that we'll be looking upon is this tracking error. Now, tracking error indicates that if the fund is actively managed or passively managed. Here we can see that HDFC FlexiCap fund, being an actively managed fund, has a tracking error of 5.99%. Basically, actively managed fund has higher tracking error in comparison to a passively managed fund, indicating that there is something different done by the fund rather than just piggybacking the performance of the benchmark, which is usually done by a passively managed fund. For example, index fund or ETF fund. Now, for a better understanding, we load an index fund. Now, this is Motilal Oswal Nifty 500 Index Fund, a fund which is passively managed following the same index, that is Nifty 100, similar to FlexiCap fund. Here we can see the tracking error is less, that is, it is only about 1.54%, because the fund's objective is to piggyback the performance of its benchmark. Therefore, it is attributable to the expense ratio of the fund. So we can conclude that actively managed fund has higher tracking error and a passively managed fund always has a lower tracking error. Now, next parameter that we'll be looking upon is this information ratio. Now, information ratio is calculated by taking ratio of annualized excess or alpha to that of the tracking error. So this is how we derive to the information ratio of 0.63 for HDFC. If the alpha is positive, the fund is outperforming the benchmark, and therefore the information ratio will be positive. Whereas if the alpha is negative, that means that there is no excess return generated over the benchmark, and therefore the information ratio will be negative. So we can conclude that higher the information ratio, the better is the fund's manager strategy of managing the fund, and it is working well. So this was the explanation for tracking error and information ratio, as well as the calculation as to how we derive to this information ratio. The next two important ratio that we'll be looking upon is this up capture and down capture ratio. Now, up capture ratio tells us how the fund was performing when the market was in bull run. Here we can see that the up capture ratio of our fund was 107.73. Now, if we consider that the benchmark was having an up capture ratio of 100, it basically means that if the benchmark was up by 10%, our fund was up by 10.7%. So higher the up capture ratio, the better it is. Now, once you click on this I button, you can also find a month-on-month bifurcation. Please note, here only those months will be taken under consideration wherein the benchmark was generating positive return, irrespective are fund generating either positive or negative. And on top, you can see the annualized return series of the upward movement for both of the fund as well as the benchmark. Now, once you divide this, it will come up to 107.73. The next important ratio is down capture ratio, which is exactly opposite of the up capture ratio. So down capture ratio tells us how the fund was performing when the market was in bear run. Here we can see that down capture ratio of our fund is 92.22. Now again, if we consider that the benchmark was having a down capture of 100, it means that if the benchmark was down by 10%, our fund was down by 9.2%. So lower the down capture ratio, the better it is. Once again, when you click on this I button, you can get a month-on-month bifurcation, wherein only those months will be taken under consideration, wherein the benchmark was generating negative return. Irrespective, our fund generating either negative or positive. And again, on top, you can find the annualized return series of the downward movement, wherein for both fund and the benchmark is something that is mentioned. Once you divide this, it will come up to 92.22%. So again, higher the up capture ratio, the better it is, and lower the down capture ratio, the better it is. Next is monthly statistics. Now, based upon the start date and end date that we have selected, which is basically 26th November 2019 till 28th November 2024, it is indicating that there were total 61 months. And out of this 61 months, 44 were such months wherein our fund was up, which means it was generating positive return. And 17 were such months wherein our fund was generating negative return. So in this 44 month, the best return that it has generated was about 13.62%. Worst was to an extent of 0.05%. While it was down for this 17-month generating negative return, the minimum negative return it has generated was to an extent of 0.60%, and the maximum negative return it has generated was to an extent of 25.76%. Now, to find in which particular month and in which particular year was this best and worst return generated, for that you can anytime plot this on monthly chart. All you have to do is select and drag. So we see it was the month of March year 2020, wherein the worst return of negative 25.76% was generated. And exactly next month, which is April 2020, was this best 13.26% of the return that was generated. Also, during the month of October, the corrections were going on. That is also something that can be plotted onto the monthly chart. So you see it was negative 3.76%. Similarly, something you can find on the yearly statistics as well. Now, the next tab that we'll be focusing on is this asset allocation tab. Within this asset allocation tab, the very first sub-tab is the overview, wherein you can find all of the holdings of a particular fund. So we can see there is 58 holding for this HDFC FlexiCap fund as of 31st October 2024. Please note that our update cycle runs from 8th to 13th of the month, and accordingly the holding analysis gets updated. But anytime you can download all of the holdings in the Excel format. The next thing that we'll be looking upon is this concentration subtab within the asset allocation. Now here is a pie chart representation of the split between the large cap, small cap, mid cap, and others. So anything other than large, mid, and small, basically debt or cash, will be classified as others. Next subtab that we'll be focusing upon is this equity sector, wherein you can find the sector-wise allocation. So for this particular fund, we can see highest allocation is towards bank as a sector to an extent of 35.11%. Now to see the stocks in the bank, all you have to do is click on this particular blue bar. Once you click this, you will be able to see all of the stocks in the bank and their individual percentage-wise allocation. Once this last column is added, it will come up to 35.1%. The next tab that we'll be looking upon is this peers. Now, this tab is used to understand how the fund is performing in comparison to its peers as well as the category average. The data displayed in peers tab is basically static, which means it is since the inception. But it is not fair for the purpose of comparison because all of these funds have a different start date or launch date. So for a fair comparison, we'll move towards the compare tab. So we'll head back towards NGEN Markets platform. And this is the compare tab wherein FlexiCap category is something that is already loaded. Now let us analyze this for the period of past 5 years. So to select a start date, right beside the return column is a setting wheel icon. You click on the setting wheel icon and then you can custom your own start date. So past 5 years would be 2019, 1st November, and then you hit on go. There will be a prompt stating that a custom start date is being selected. Now here we can see that HDFC FlexiCap fund for past 5 years, the CAGR was about 22.3%. Whereas if you see, since inception, it was about 19.65%. Similarly, you can also see the Sharpe ratio since the inception was about 0.63%. But if you want to check for the period of past 5 years, we'll move back to the compare section again. And here we can see for the period of past 5 years, the Sharpe ratio for HDFC FlexiCap fund was about 0.81. So this was for the peers tab. The next tab that we'll be looking upon is the fund manager. Now here you can find the details related to fund manager as well as the latest fund manager's detail would be mentioned at the bottom. Next parameter that we'll be looking upon is rollings. Now the rollings talks about the consistency of the fund. Here you can simultaneously check for 3 rolling window. So here it is 260 days, 520 days and 780 days. So 260 days stands for 1 year working period, 520 is 2 years working period and 780 is 3 years working period. Let us say you want to check for 4 years working period. All you have to do is multiply 260 into 4. So it will come up to 1040. So we'll just edit this to 1040 and hit on run. You can anytime change it from absolute to annualized as well. Now here we can see rolling return statistics. When for 260 days, we can see the average rolling return was to an extent of 28.6%. The volatility was about 14.5%. The highest return that it has generated was to an extent of 71%. And the lowest return that it has generated was to an extent of 1.22%. Now, this particular high and low is something that can also be plotted on this rolling return analysis chart as well. So for that, I'll just turn off 520 days as well as 1040 as a rolling window, and we'll try to plot this on chart. So all we have to do is drag. So we see it was in the month of March 2021, wherein the best or the highest return of 71.12% was registered. So what we can see is if the investor would have invested 260 days prior to this date, he would have been the luckiest to enjoy the return of 71.12%. Now let us try to plot the low return. So it was 25th November 2020. So what we can see is that if the investor would have invested exactly 260 days prior to this date, he would have been the unluckiest to receive a lowest return of 1.22%. Similarly, you can also set in some return ranges as well. Now, this is to check the probability of fund giving a return between a particular range based upon the back-tested data. Now, let us say your client has a target return range of 20 to 40%. Now, let us check what is the probability of fund matching your client's expectation. So for that, we just edit these two boxes. So I'll enter 20 to 40%. And once you click outside the box, you can see that there is 46% probability that our fund can generate a return between 20 to 40%. This is for 260 days rolling window. Anytime you can change the rolling window as well. Also, you can find rolling return distribution, which is basically a bar chart representation based upon the return ranges that you might have entered. The next parameter that we'll be looking upon is this drawdown analysis. Now, drawdown talks about the strength of the fund to recover from the loss. Here you can find a graphical representation where this gray section talks about the loss phase and the white area talks about the recovery phase. Now here you can find the details of top 10 drawdown. So there was a loss of 40.29%, which was between 14th Jan 2020 till 23rd March 2020, wherein the NAV of this particular fund, it fell from 683 to 408. And it took 184 to basically cross this particular start price, which finally recovered on 4th December 2020. Similarly, you can also see there's a loss of 7.38% between 26th September 2024 till 18th November 2024, wherein the NAV of this particular fund, it fell from 1980 to 1834. The recovery is still going on and it is 21% recovered. Now, the next thing that we'll be looking upon is this scenario analysis, which basically tells you how the fund or the benchmark was performing in a particular event or a particular scenario. Now, there are certain inbuilt scenario onto the platform, or you can custom your own scenarios as well. So for that, all you have to do is click on Add Custom Scenario. Now, let us analyze US election as a scenario. So we'll give this a name as US election and select a start date, which would be 1st November, and end date would be 15th November. And then all you have to do is hit on Save Custom Scenario. Once this is done, you can anytime locate it in the Custom Scenarios tab, and you just select US election. So this blue line represents our fund, whereas the black line represents the index. Now, though the markets were down, our fund did not fall as much as the benchmark. Now, benchmark generated a negative return of 3.77% in a short period of 2 weeks, whereas the fund to an extent of 1.87%. Now, this we have compared with an Indian index. Now, let us check the fund performance in comparison to the US market. So for that, we'll change the benchmark from Nifty 100 to a relevant benchmark. That would be basically NASDAQ. So we'll select NASDAQ from benchmark section. Once this is done, we'll move towards the scenarios tab and again select US election. Now here you see the US markets were in positive. They were giving positive return, which is 2.41%, and the fund was giving a negative return, which was to an extent of 1.87%. Now let us take a look at certain reporting options. The first would be PDF. Now there is 1-pager PDF, 2-pager PDF, as well as 3-pager PDF report available. You just click on Create PDF as an option. Once this gets downloaded, so this will come up with co-branding. So on top left, you would be able to see your company name and logo. So this is a single fund analysis for HDFC FlexiCap Fund generated in a PDF report. So you can find the basic details, asset allocation, top holdings, the split between large, mid, small, and others, sector-wise exposure, performance chart, parameters, monthly, yearly statistics, as well as drawdown analysis and rolling analysis as well. And last page being the disclaimer. The second reporting option that we have onto the platform is this PPT as an option. So these PPT are completely customizable. It can be customized as per the requirement of the client. So once you click on PPT as an icon, a PPT reports again gets generated. So this is how the PPT report will look like. And again, it will come up with co-branding. So on top left, you would be able to see your company name and logo. So all of the holdings, the asset allocation, the split between large, mid, small, and others, sector-wise exposure, debt exposure, holdings, performance chart and analysis, few parameters that have been mentioned, rollings and drawdowns. And last page being the disclaimer. Now let us say that you want to highlight US election scenario in the PPT. So for that, what you can do is you can definitely generate a screenshot for that particular tab. So I'll just change the benchmark Nifty 100 again. And there's this screenshot icon present right beside beta as an option. So once you hit on this particular icon right here, a screenshot gets generated. So there are master slides that we have provided. Once you insert this master slide, you can anytime insert the image, basically the screenshot that we have taken, that gets saved onto your system. So there's complete flexibility in terms of PPT to be customized as per the requirement. If you wish to download historical nav, you can anytime click on the price icon, which is right beside PPT as an option. Once you click on this price icon, an Excel report or CSV format gets downloaded, basically considering the date as well as the price and the returns detail at the very last column. So that was it for the topic related webinar. The forum is now open for a Q&A session.
All right, so there's a question in the chat box. Can you explain about fund ratings? Sure. So on NGEN Markets, we have ranked funds on a scale of 0 to 10, and these ratings are given to all the funds from each of the categories. So if you simply click on that black tile that you see beside the name of the fund, a small window will open up. In this case, you can see HDFC FlexiCap has been given a rating of 8.21 out of 10. Now, to arrive at this score, we've considered two parameters, two quantitative parameters and one qualitative. The qualitative parameter is the age of fund, right? So if a fund is a younger fund, by default, it will be given lesser score as compared to a fund which is completed at least 5 years into existence. Once it completes 5 years into existence, there will be no disadvantage that will accrue to any of the funds. That means it will be ranked pari passu with all the other funds which are 5 years or older, right? Coming to the two quantitative parameters, there's a combination of AUM and short, medium, and long term returns and volatility. AUM gets an allocation of 10%. The balance 90% is equally split between short, that is 1 year, medium, that is 3 years, and long term, that is 5 years, returns and volatility, that is risk adjusted returns. That is how we come up with these scores, which are called NGEN fund scores. And please note, these scores are comparable within category. Therefore, when you kind of, in this case, open FlexiCap as a category, you can quickly say that, okay, on the basis of their current positioning, the top 5 funds from FlexiCap are Parag Parikh, HDFC, JM, Quant, and Franklin, based upon these fund scores. Sure. There's another question which asks, can you explain CAS upload? Sure. The webinar topic today was mutual fund analytics. That's why we did not cover portfolio onboarding. However, explaining this in brief, we have a eCAS upload functionality where you can upload clients' portfolios if you have their eCAS statements. For that, you need to simply click on Statement Analyzer as a tool, which appears at the top. When you do that, eCAS statements, which are generally password protected, original files can be uploaded, and then portfolio analytics can be run. That has to be accessed using the Statement Analyzer tool. Portfolio creation will be a separate webinar topic altogether. However, again, explaining in brief, what you can practically do is you can simply go to the portfolio section, and when you go in the portfolio section, there is a plus icon at the top. When you click on that, a window opens up and you can add in port funds to be included in the portfolio by clicking on add a fund. You simply go on adding how many ever funds you want, give them allocations, and then put in the portfolio name, click on create. That is how you create portfolios on NGEN Markets. Right? We've already covered this in multiple webinars. We'll also come up with a similar portfolio creation webinar in the next couple of weeks. Yeah. Additionally, if you kind of require detailed one-to-one session on portfolio creation, you can definitely write to us on support@engineresearch.com, and someone from our team will get in touch with you to arrange this session. There's another question in the chat box which asks, can you please explain the difference between alpha and tracking error? Sure. So alpha on the platform is practically excess return of the fund over and above the benchmark. That is simply you reduce the fund's return from that of the benchmark. Of course, in this case, the fund generates excess, right? So if you take 178, that is the cumulative return of the fund, and reduce 130 from it, the difference is 47. That is cumulative excess on benchmark. That's kind of a modified alpha. On the other hand, the tracking error tells you what is the standard deviation of this excess returns, right? This cumulative outperformance chart you can see on the left hand side, right? This is nothing but excess returns over benchmark. So till 2022, this fund, HDFC FlexiCap, did not outperform the portfolio, right? Therefore, this is in red, right? On the other hand, after 2022, it started outperforming. So after 2022, there were excess returns. So irrespective whether positive excess or negative excess returns over benchmark, it will consider how volatile or how different were these excess returns, basically taking standard deviation of these excess returns. And that is how you derive the tracking error. It is another question, how to get daily reports for indices. So by default, indices daily reports are not sent across. Daily NAV reports for mutual funds are generated on the platform. For that, you can simply go to the funds section and go to the reports tab. In the reports tab, there are daily NAV reports that can be downloaded. For indices, however, you will have to either check in the markets section or in the compare section and take an Excel download for a particular date. We do not by default send across daily reports for indices. Any more questions? Please let us know. The daily returns of mutual funds, basically the NAV update happens every day. So basically, there are some AMCs that are quite robust in releasing their NAVs. So it either happens late night or typically early next day. We keep on running updates even in the morning, next day morning. So typically, if you check around 10:30, 11, you will see it updated for major mutual funds, right? Including the indices, of course. Any more questions? Please let us know. All right, Ashi, if there are no more questions, we can close for today.
Okay, ma'am. Thank you everyone for joining in. You can visit our YouTube channel and find a dedicated webinar playlist created. So as of now, there are 138 videos and today's video will be uploaded by next week. Thank you everyone and have a great weekend.